The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. Hope you're having a good evening. This is Cameron Nish from Apex Trader Funding. Tonight we have a special guest with us from Controllers Inc., Scott Arden, and also Stefan Hild, who works with Scott. And tonight we're going to be getting some good information on how you can get an entity set up, pay less taxes, and a bunch of other things here. Before we get started, I actually have a couple of things we need to take care of. So first of all, we have our disclaimer. Take a second to read that. This webinar is being recorded, so you can read that a little bit later. And then we have a couple of announcements. Now, I know that I said that this was not going to be a trading related webinar, but I do have two trading related announcements just to get out of the way here. The first one is that if you are interested in Apex Trader Funding, we have our discount going on right now. It's 50% off new accounts for the first and recurring months. And if you would like to take advantage of that, the coupon code is SAVE50. And hopefully some of you are already doing that and also took advantage of our Halloween sale that we just had. The second announcement.
I wanted to say that, can y'all hear me okay? This is Daryl.
Yeah, hey, Daryl. Good to have you.
Hey, Daryl.
Hey, I just want to say, just do a little introduction for Scott. I've done a lot of work with Scott, and I've done company setup with him. I've set up a trust with him for my assets that are outside my other trust. I've had him set up, things like medical and power of attorney and all that stuff with my wife. And he has been great to work with. His office is great on following up, great customer service, and he's just a fun guy to hang out with too. So, but I think y'all really enjoy his presentation.
So Daryl,
I'm going to hand it off to Scott, and I'm going to step back out of the way. I hope y'all are having a great night.
So thanks, Daryl. Just real quick to finish our announcements, Daryl will be doing the $1 million account giveaway tomorrow for the drawing. So if you're signed up and interested in that, then you will see if you are a winner tomorrow. And then the last thing, again, this webinar will be recorded and available a little bit later tonight for things. So let me come over here, and I will turn the time over to Scott and get him on the screen here. And yes, we do. Take that. Can everybody see Scott okay? Okay. Take it away, Scott.
Awesome. Well, thank you guys. I'm super excited to be here with you and your tribe to talk to you a little bit about corporate structure, compliance, and why we use corporations and LLCs and all the great benefits that come along with it. So let's see here. Can you all see my screen?
Looks like the screen is there. Yep, getting a lot of yeses.
All right. And is it the screen of me or of my presentation?
We actually see both. We see you
and your
presentation.
Awesome. So it looks like what I'm going to need to do then is probably reduce the size of this so that I can actually see the screen myself. And good to go. Awesome. All right. So what we're going to do, like I said, we're going to talk a little bit about corporate structure and compliance and all the good things that come along with it. So as Cameron had mentioned, as Daryl had mentioned, my name is Scott Arden. I'm the CEO of a company called Controllers Limited. I'm also the managing member of a company called Generational Wealth Solutions. And what I'm going to do, I'm going to talk to you, like I said, about these corporate structures, why we use them, the benefits for them, and all that good stuff. So a little bit about my firm, my team. We have a combined 70 years of experience in corporate structure, compliance, asset protection strategies, and creation of generational wealth. I myself am a generational wealth expert. I've been in this industry for 26 years. I'm also a certified asset protection planner, and I'm a certified estate planner. Now, how controllers came about, what we found was there's a major disconnect between your tax team and your legal team. And to try and get those two to talk to one another is almost like an act of Congress. So that's why we brought controllers to the forefront. Now, I want you guys to understand we are not attorneys or CPAs. However, should you require the assistance of an attorney or CPA, I do have them as part of my overall team. Now, why do I do what I do? These two right here are my why. This is my son, Trevor, and my beautiful granddaughter, Everly Joy. This is why I do what I do. I'm very passionate about teaching people how to create a legacy or how to create generational wealth. I have built this legacy for them, and I'm educating them through financial literacy to understand upon my passing how to deal with my estate. And again, it's my passion to teach you exactly that. So it all starts with a blueprint. This is your roadmap to success. Stephen Covey, the well-known author of the book 7 Habits of Highly Effective People, says, begin with the end in mind. Have a clear vision of where you're going and how you're going to get there. You want to ultimately build a solid foundation in which you're going to build your infrastructure or your legacy. You don't want to build this on sand because ultimately, over the course of time, it's eventually going to crumble. So what I'm going to do is I'm going to give you a view from about 30,000 feet. I'm going to go through quite a few slides and a ton of information, and I encourage you to sign up to have a conversation with us at the end of this presentation. Now, people ask me all the time, why should I incorporate or set up an LLC? Well, there's a lot of different reasons, but tonight I'm going to talk to you about really the 5 core reasons why we should structure corporations or LLCs. The first one is liability protection. What does that mean? Well, let's say, for instance, if you're in business for yourself, there's a liability issue that arises. Well, we ultimately want to protect our personal assets, everything that we've built up to this point, from any potential liability that can affect your business. Next to that is the tax savings. As a corporate structure, you're afforded upward of 233 to 305 different corporate write-offs. So what that means is that allows you to use more of your money up front, which ultimately results in paying a lot less to Uncle Sam. Next to that is protection against creditors. So say, for instance, if you've had a previous liability issue, maybe you've gone through a marital dissolution and you've got that ex-spouse that wants to just keep coming after you or really digging in to find out what you're doing so that they can ultimately try and make some more money. Again, a corporation or an LLC keeps those assets completely separate from you. So again, that would be like if that previous creditor was trying to go after your employee or your employer, I should say. You can't do that. And this is what you're actually creating for yourself. Again, for corporations, they're great for estate planning because, again, we as individuals, we have an expiration date. However, corporations and LLCs have perpetual existence. So again, if your intent is to build a legacy and create generational wealth, the only way you can do so is utilizing corporate structures. Now, the other beautiful thing about corporations and LLCs is they have the ability to build their own credit, just like we did when we first turned 18. And dependent upon how many companies or corporations and LLCs you have, each one of those has the ability to build its own credit. So not only can that double, triple, or quadruple your overall borrowing ability. Now, what are a lot of the business risks or some of the business risks that we face as business owners? Well, we all know contract disputes is a really big one. right? Your kids. Now, a lot of you in the audience may have kids that drive. And this was one of those things that I didn't understand how my child, my son, could affect what I've been building. How I found out is when my son first turned 16, he was driving and texting. We all have these things, this thing right here. And he was texting and driving and he got into a fender bender. Well, we went to the insurance to ultimately cover this issue. And the insurance said, sorry, we don't cover negligence or punitive damages. So guess what? Dear old dad, they came after me. Now, because I have things structured correctly, utilizing corporations, LLCs, and trusts, I, Scott Arden, can honestly say without penalty of perjury, I don't own anything. I simply control it. See, John D. Rockefeller's secret to financial success, when asked in his final interview, was, what was that secret to his success? And he said, own nothing and control everything. So again, having kids and kids that drive, they are potential liabilities that can affect your business. And, if your business is a trader and you've got a decent size account or you've got a massive account, having it set up just under you is a very risky thing. Some of the other ones, accidents on the jobs, joint ventures or partnerships. So we all know joint ventures and partnerships usually start out great, but don't always end up great. So I like to say form an entity because you're designing the divorce while you're in love. And how we do that is by properly written operating agreements and bylaws within the company. Again, we all know what discriminatory harassment claims are, so I'm not going to go and belabor those. But again, these are really some of the top business risks that we face as business owners or investors. So, which entity is right for you? Are you active? Are you passive? Maybe you're doing a little bit of both, right? So it's all about having that right corporate structure in place. I hear this all the time. I formed an LLC, and then I ask the question, well, why did you form an LLC? And my response, or the response that I get, is, well, a buddy told me to do it. My CPA told me to do it. But do you know that you're in the right structure for you? So I'm going to start out with the sole proprietorship. As I alluded to earlier, sole proprietorship is a very bad way of doing business. First reason, there's no legal separation between you and your business. So again, if the business has a liability issue, that liability issue can affect your business. And if you have a personal liability issue, let me back up. So if you have a business liability issue, it can affect your personal assets. If you have a personal liability issue, it can affect your business assets. So again, there's no legal separation. Next to that, limited tax deductions. See, as a sole proprietor, you only have about 15 to 30 different deductions on your Schedule C or Schedule E. However, when we use corporate structures, as I had mentioned, you've got well over 300 different deductions that you can take advantage of. The other thing, you're unable, as a sole proprietor, you're unable to build a separate credit profile because everything is related to your personal FICO score. And unfortunately, as I said, we all have an expiration date. And if you, the proprietor, die, the business essentially dies with you. There's no perpetual existence. And again, as an individual, the more money you make, it's that old saying, right? The more money you make, the more money they take, meaning the government. So again, sole proprietorship is a very bad way of doing business. Now, why would we want to form a corporation or an LLC now in 2022? Well, based upon the current tax reform, which has a sundown period, unfortunately, in 2025, but right now the corporate tax rate is 21%. So whether you make 50 grand or you make 50 million, you're only going to be paying taxes at a federal rate. Let me qualify that, at a federal rate of 21%. Now, as we all know, the new Biden proposal coming up, he wants to increase corporate tax rates up to 28%. Now, that's still decent based upon what our personal brackets are. However, it's still quite high. So again, if your intent is over the next 2 or 3 years to amass wealth and build your estate, we need to put the corporation in place now so you can take advantage of these tax rates. So it all starts out with a corporation. Now, corporations were actually created hundreds of years ago. They actually originated in Europe in the shipping industry. When everybody was migrating across the ocean over here to the United States, the ship captains were extremely concerned about their personal assets being affected should, in the event the boat go down, the freight goes overboard, whatever that looks like. Again, the ship captains and the ship owners didn't want to be personally liable for that. So they created this corporate structure. Now, what is a corporation or an LLC? The legal definition of a corporation or an LLC is an artificial person created by law. It has the ability to do anything you want it to do, but think and speak for itself. So ultimately, you, the shareholder, are the brains behind the operation. Now, the beautiful thing about a corporation, your liability is only what you invest. So let's say, for instance, if you put $10,000, $20,000, $30,000 into a corporation to build your business or grow your portfolio, and the company were to have a liability issue, the worst that you could stand to lose is your initial investment. Now, corporations are a little bit different from LLCs. I'll get to LLCs here in a little bit, but how corporations work are there's a corporate hierarchy and they're controlled by the shareholders. So the shareholders are the primary decision makers within the business. The shareholders then pass down directives to the directors, directors to officers, officers to managers, and managers to employees. So again, controlled by the shareholders, the primary decision makers. As I said in the previous slide, the benefit of the corporation, and this is why it really became the best entity of choice in 2018, is because there's that 21% flat tax across the board. So again, 50 grand, 50 million, you're only going to be paying taxes at a flat rate of 21%. Now, if we want to get out of the business, upon the exit, we can simply sell the shares of the ownership or the stock of the corporation. So again, C Corporation is really the overarching golden ticket entity that you want to use, especially if your intent is to amass wealth. So who's ideal for C Corporation? Whether you've got multiple employees, maybe you're looking to take on some angel or venture funds, maybe you've got visions of taking this company public at some point in time, you want to offer some stock incentives to your employees, or you're looking to do multiple rounds of funding, or if you're just making a boatload of money, the C Corporation is really the best entity for you to set up. Now, some other benefits of the C Corporation. The C Corporation is the only one. Go ahead. Was there a question?
Oh, I was going to say, make sure we tie in how it ties into traders too.
Yeah, absolutely. 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 So yeah. So going back to what Daryl was saying there, how it ties into traders is, we can take advantage of far more tax deductions. I was going to get to that here in a little bit when it comes to taxes, but as a trader, and again, as a sole proprietor, you have very limited deductibility options. So you want to be able to take advantage of that 21% federal flat tax. You want to take advantage of the 233 to 305 different write-offs. The C Corporation is really the best. And again, when it comes to kind of that trader status, it's really hard to achieve to get under that trader status where you can take advantage of certain deductions. Now, as a corporation, you're afforded those deductions right out the gate. So is that does that cover what you wanted me to cover there, Daryl?
Yeah, I mean, you can write off your internet, you can write off education, you can write off subscriptions,
Absolutely.
You can write off data fees, you can write off, like our evaluations, PA fees, things like that. And
Absolutely.
all the income you get paid is capped at that 21%.
Absolutely. So yeah, and you know what I'll do, I'm actually going to show a slide that'll have quite a few of the deductions that we can actually take. But then in our conversations, we can always discuss what are the specific deductions that you really should be taking within your business. All right.
And one thing that you taught me to do is team building events, because my family is all employed by the company.
Absolutely.
And so every time we go to do a team building event, like, hey, let's do a team building event at Walt Disney World, so we can all come together and plan and think about how to grow the business. There's just a lot of creative ways to build your company.
Absolutely. Absolutely. So team building, you know, here's one thing I'm going to teach you is you are never going to take a vacation again in your life. I know that sounds weird, but you're never going to take a vacation again in your life. The reason I say that is vacations are not tax deductible to you as the individual. However, if you take a business trip and you hold that board of directors meeting, say in Cozumel or Maui or wherever you want to go, that is a business trip. That's 100% tax deductible. And then tying back into what Daryl was saying there is while we're on that business trip, we can be doing other things like team building. We want to go take a boat out. We want to, you know, rent jet skis, whatever that looks like. We can do the team building combined with business trips. So again, vacations, that's why I say you're never going to take a vacation again. Once you incorporate or you form an LLC, you're going to be able to take advantage of those business trips and far more tax write-offs, a lot like Daryl was talking about there. So now this takes us to this benefit. Here we are at the end of 2022. Now, some of you may have a huge reserve built up to where you're like, I don't want to have to pay taxes on all of that. There's a solution. A C corporation is allowed a fiscal year end. It's the only company that is allowed a fiscal year end. What that means is that instead of how we file, right, where it closes out as December 31st, that's what starts our new year, a corporation can actually choose a calendar year like June or even September. So what that does is it allows us to strip revenue out of 2022 and allow us to move the money, as this slide represents here. If we have two companies working together, this operating company could be your trading company. It could be a coaching company. Maybe you're in real estate, whatever that is. That operating a company can contract with your management company, which is a C corporation, and we can strip the money out of 2022 and put that money into 2023. Now, if we have that June or September year end, what does that give us? An additional 6 to 9 months to take advantage of all the corporate tax deductions before we actually have to go file the taxes for the company. So this is a really cool benefit. And again, because we're here at the end of the year, this is what I like to call my code blue strategy, year end, going, okay, what do? We have this huge reserve. What are we going to do about it? Employing this strategy is an absolute benefit, especially right now. Now, that takes us to the S corporation. S corporations are great. Again, the liability, the only risk is your investment. They are controlled by shareholders. However, in an S corp, there are some restrictions. So an S corporation cannot be owned by another company, and it cannot be owned by a non-U.S. resident. However, a U.S. resident and a qualified subchapter S trust can actually become the owner of this corporation. Now, the difference between an S corporation and a C corporation is the S corporation passes profits and losses through. Now, this may be a good thing if you're just starting out in business. Most business owners typically don't know what they're going to be making within the first or second years of operation. So say, for instance, we have income coming in. We're taking advantage of all the tax deductions and the benefits Daryl and I were just talking about, but that runs the company at a loss. Well, the benefit is we can take that loss and pass it through to us personally to offset income or gains that we may have from previous years or that come in from different areas. So again, it's based upon a pass-through. It does fall down to the graduated tax brackets. So again, as you operate an S corporation, you want to keep very close gauges and controls on the growth and development of the business, because if that income amount becomes so much that you don't want it to pass through to you, we can actually switch an S corp to be taxed as a C corporation and gain that 21% federal bracket. Bear with me. Awesome. All right. And again, if we want to get out of an S corporation, we simply sell the shares of stock. So that then takes us to the limited liability company. Now, the limited liability company, from my experience in this and talking to well over 100,000 people at different business conferences and wealth summits, is the most commonly set up, if you will. Now, when I ask that question of, why did you form the LLC? And I get the response of, well, a buddy told me, or, I saw it on TV, or whatever that is. Again, is it the right structure for you? It does have the most flexibility, and I'll talk about that here in a little bit. But what a limited liability company is a hybrid between a corporation and a partnership. Now, listen to what I'm saying here. Partnership, which means a partnership is consistent of two or more individuals who file separate tax returns, or two or more companies. That creates the partnership. So if you have an LLC and your husband and wife and you file a joint tax return, in the eyes of the IRS, you're still seen as a sole proprietorship. So again, very limited deductibility options. However, the beautiful thing, and I'm talking about here, is the LLC has the flexibility to be able to be taxed in 4 different methods. So one, if it's a single owner or husband and wife, it's going to be considered a single member or sole proprietor, better known as a disregarded entity. Then it can take on the taxation of partnerships. So again, 2 or more individuals or 2 or more companies that don't file a joint return. We can take on partnership taxation. But the beautiful thing is that an LLC can also be taxed as an S corp, and it can take on the tax designation of a C elected entity or a C corporation. So again, it's very flexible. It has the ability to make some changes as business grows. Again, your liability, the only risk is your investment. In this case, an LLC doesn't have shareholders. It has members. Members are the primary decision makers within a business. Now, there's 3 different types of LLCs. One is a manager managed LLC. So say, for instance, you go into business, you and a partner go into business, and you're operating the business. But again, we as entrepreneurs, we like to get into other things. So as that manager managed LLC, we as the members can appoint somebody as a third party to oversee the operations. However, we, the members, still have the final say, the control of the business. Then you have a member managed LLC. So again, 2 partners go into business. They're the ones overseeing the operations of the business. That is a member managed LLC. Then there's a professional LLC. So professional LLC is used for like doctors, engineers, architects, lawyers who want to build a group, a consortium, if you will. You can form a professional limited liability company. And then there's the other one, and I hear this all the time, is, Scott, there's 4 actually, and that is a series LLC. Now, series LLCs are great if you're doing business in a state that recognizes series LLCs. So if you have a series LLC and you're doing business in a state that doesn't recognize it, well, the LLC is not going to be treated as separate series. The LLC is going to be treated as a company as a whole. So again, making sure that we have the right structure in place, LLC-wise, making sure we have the best method of taxation so you're getting to take advantage of these tax write-offs we're talking about, is absolutely critical. This is what a full structure will look like. Now, This includes your irrevocable trust. So again, if we have that Nevada or Wyoming management company in place, that's your C elected corporation. That's going to be your linchpin company at the end of the day. Now, if you own that company, that membership, that stock becomes an asset of yours. So say, for instance, you're driving down the street, you get into a fender bender, somebody files a lawsuit and they gain a judgment against you. Well, you've got to disclose all of your assets. And the ownership of your businesses are assets. Those assets can be attached in the event of a judgment. So why would we want to hold those personally? We don't. What we want to do is we want to form an irrevocable trust. And an irrevocable trust, I want you guys to understand, don't be fearful of it. Irrevocable sounds kind of scary, but the beautiful thing is the ownership of the entity is the only thing that irrevocable trust is holding, which means if the C corporation or that management company has assets and you want to move them around or sell them or buy more, well, we have the flexibility to do that at the corporate level. Again, the equity ownership is owned by the irrevocable trust. Now, the reason that I have this 98 and 2 is to create the partnership relationship. So again, if the business were to ever be sued or the principals were to be sued, we can gain what's called charging order protection. Charging order protection is essentially a garnishment remedy. It's based upon a distribution of profit. However, as I said, a C Corp doesn't distribute profit like an S Corp or an LLC does. So therefore, you as the managing member can say, well, we're not going to create a distribution this year, and now your creditor has to pay taxes on money they've never received. That really puts you in a very favorable negotiating position to settle for pennies on the dollar. Now, the other 2% in that management company, we put over into the revocable trust. The revocable trust is used for your estate plan. That's what outlines your durable power of attorney for healthcare, your durable power of attorney for financial, your living will, so how your estate is to be dealt with while you're still walking amongst us, and your last will and testament or pour-over will, which says, upon my passing, this is how I want my estate and my body to be handled. So again, we use the two to create the complete asset protection structure and putting yourself in the position like John D. Rockefeller did to be able to say, and how I did actually, to be able to say honestly without penalty of perjury, I don't own any of this. I simply control it. Because again, if you own it, it can be taken. However, if you control it, you get to reap the benefits of the company. But again, it can't be taken because you don't own it. And again, we would do the same thing if you have an operating company in your home state. Again, we would want to put that into an irrevocable trust as well as a revocable trust. And the beautiful thing is, between these two companies, we can employ those management agreements and have the two companies do business with one another long term. Now, this strategy is not illegal. It's based upon how our country was built, the system of free enterprise. One company can do business with another company even though there's a common denominator, which is you. So again, these strategies have really been employed since the dawn of time. It's just they're not widely taught because the system doesn't want you to understand how to use that. That's why I'm here. That's why I'm bringing this to the forefront, and that's why this is my passion, to teach other people how to build a legacy. Now, as Daryl and I were talking about, you can turn everyday expenses into deductions. Live your life like a business. See, a lot of people think, I've got all these bills and I have to take home $6,000, $8,000 a month. But do you really have to take home that type of money? See, I personally only pay myself $48,000 a year. And the reason is, well, it keeps me in the lower tax brackets, right? But people might be saying, well, how do you live? How do you live like that? Absolutely. I utilize my corporate structures to take advantage of all of these deductions. See, me as an individual, all I do for my $48,000 is figure out what I need to cover: food, clothing, shelter, personal entertainment, and insurance. And I have my company pick up, or my companies pick up, the rest of my expenses and deductions. Now, a lot of people might be thinking, well, I can't go out and get a loan on $48,000 of revenue in my personal income. Here's the beautiful thing. Your companies have balance sheets. Balance sheets add to your source of income. So you can utilize those company structures, the balance sheets, the profit and losses, and the statement of cash flows to go out and get funding. Okay? So with that, again, you can turn everyday expenses into deductions, live your life like a business. As I said, there's approximately 233 to 305 different corporate write-offs. However, these right here are pretty much the majority, well, I'm not going to say pretty much the majority. There's about 50 or 60 of them here. And as you can see, accounting fees, advertising, air conditioning, airplanes, assistance, business promotion, general business insurance, right? Paying your kids, braces, education, property loans, all of this. Again, if you're living the corporate lifestyle, you can take advantage of these things, all right? And like I said, there's 233 to 305. This is just a handful of them. And, if you have questions specific to you, that's why we're here. We've got my senior strategist, Stefan, here to address any questions that may be coming up. But we would also want to have that conversation with you in a one-on-one. So a lot of people don't understand that we can actually employ our children, all right? Now, we as principals, the IRS says that we can employ our children. We can pay each one of them, again, each one of them, up to $12,200 a year, which is completely tax-free income to your children and becomes a tax deduction to your business. Now, there's some qualifying factors. If you're in an S or a C elected entity, you do actually have to take out withholdings just like you would with any other employee. However, if you set up a family management company that maybe oversees all of your businesses, that's where we can employ our children, pay each one of them up to $12,200 completely tax-free. And the beauty is you can actually set up a Roth for your children and put $6,000 into a Roth. Now you have an additional investor that can go into deals with you. Isn't that beautiful? So again, employing your kids, great thing. Again, it has to be age commensurate duties. So if you're utilizing them as models, maybe they're a little bit older, you have them sweeping, taking out the trash, doing some filing for you, or maybe you even have a 15 or 16-year-old, maybe even a 17-year-old, having them out drive around and doing errands for you. Again, this is a good way of paying yourself less. So like I said, $48,000 a year, right? My son, guess what his hobby was? Racing motocross. Guess who the sponsor was? Well, dear old dad, but really the companies. So instead of me having to take $12,200 for myself personally, which I would have to pay taxes on, that increases my brackets, right? I put it into a bank account, and when my son comes to me and says, I need new graphics, I need new tires, I need an oil change, whatever that looks like, it's not coming out of my pocket, it's coming out of that bank account. So if you've got children in dance, in maybe they're in theater, maybe they love, they love sports, right? Again, instead of that money coming out of your pocket, we pull it out of this account that you set up for your kids. Next one is your car. It's a gold mine. The average deduction is around $7,500 per year. Now, there are ways of being able to take more through a Section 179 deduction, but that would mean that the car would be owned directly by your company. The problem with a vehicle being owned directly by your company is liability, right? That car travels down the street 20, 30, 40, 50, 60, 70 miles an hour. And if it gets into a fender bender, the liability is coming back to the business. So if you choose to go that route, I would advise that we set up a separate entity to put the vehicles in, and then they can be leased back to your businesses, which is how it becomes a tax deduction to the business and becomes another tax deduction for any maintenance, insurance costs, payments of cars, things like that. So there are ways of being able to take advantage of this. There's multiple different ways of being able to take advantage of these deductions. So with deductions equals greater profit. Now, this one's always a funny one. Whenever I talk in front of a large crowd, whenever I talk on a webinar like this, a lot of people are like, what, you could actually do that? Now, what I mean by awards. So again, who's been in your business the longest? Well, if you're the founder, probably you, right? So you could take a longevity award. Now, that's up to $1,600. That cannot be cash or cash equivalent, but if you want that new Orbea bicycle, or maybe that new set of ping golf clubs, instead of that money coming out of your pocket, have the company write a check to the merchant and pay them directly. Same thing with safety awards. Well, who's in charge of keeping the workplace safe? Well, again, that's another $1,600 deduction that you can take in your business. And again, it's tax-free income to you. Let me qualify that. Both of these awards or these deductions cannot be taken in the same year by the same person. And if you're the one receiving the longevity award, it cannot be taken every year. It has to be every 5 years. So again, a little qualifying factors in there. Through a corporation, we can set up a medical and dental reimbursement plan. So instead of, the premiums, copays, deductibles, things of that nature coming out of your pocket, we can actually put up to $10,000 away, which becomes a tax deduction to the business. And you use that money to reimburse those out-of-pocket expenses not covered by your insurance. Vehicle deductions, $7,500. If we set up a retirement plan, specifically a solo K, you can put up to $62,000 away as a tax deduction to the business. Now, this can also become another investment vehicle for you to get into trading with, maybe other real estate investments. I mean, again, what we're doing is we're utilizing more of our money and moving it into these pre-tax buckets, if you will, that we can use for other investments. Educational expenses, hiring your kids. As I said, there's how many? 233 to 305 different write-offs. And through 6 of them right here, I just showed you how to save $98,550 in your business, in your trading business, in your real estate business, whatever that is. So again, this is why we want to bring this to the forefront. Let people understand that there is a system that we can play by that the IRS wants no one to know about. It's a beautiful thing. It's just the professionals, your professionals, aren't really going to bring this to you, right? There's a lot of different types of CPAs and professionals out there where some say, hey, these are some ideas you might be considering, but the majority of the ones that I've encountered over the years are more rinse and repeat. This is always what I've done for my clients in the past. So having the right CPA, the right team is absolutely critical. Now, with these awesome benefits equals responsibility. What do I mean by that? When I started out explaining what a corporation is, or an LLC, I said it's an artificial person created by law. It has the ability to do anything you want it to do, but think and speak for itself. So again, because you're the brains behind the operation, ultimately what we've got to do is give the company a voice and a thought process. Formal documentation is what proves that you are treating the company completely separate, that it should not be treated as an alter ego of you, the principal. And I'll get to that here in a minute. So this is just kind of a funny slide. I loved it when I found it. And basically it states, this board meeting is just a formality, by which I mean extremely important for protecting me from being sued personally. So again, like I said, the whole reason for an entity is liability protection. If the business gets sued, I personally don't want to be liable or sued personally. So we need to make sure we follow the rules. Corporate formalities are minutes and resolutions, and they are required by law. I hear this all the time. I was told to form an LLC because they don't have the same compliance requirements that you do with a corporation. Anybody telling you that is absolutely misinforming you. A corporation, just like an LLC, has to have minutes, has to have resolutions. And The rebuttal to that, people might say, well, the state doesn't require it. That might be true. However, the federal government and the court system absolutely requires it. And I'll talk a little bit about that here in a minute. So again, the minutes are the voice and the thought process of the company. The resolution is essentially a permission slip or the authorization from the board. Now, this may seem kind of weird that, well, it's my company. I should be able to do with the company what I want, when I want, things like that. Well, put yourself back in corporate America. Whether you were an officer, a manager, or an employee within a business, you were given certain parameters to make decisions within the business. However, if something came across your path that was outside of those parameters, you had to go back to a superior for approval. Well, the same goes for your company. Not only do you own the company, but you work for the company. So when we're utilizing company resources, company assets, entering it into contract, we better be making sure that we have the permission slip to go ahead and use corporate dollars in that capacity. So what are some of the things that need to be documented? Well, in the 26 years of me doing this and the combined 70 years of my team, we've identified there to be about 256 different corporate formalities within the business. Again, it's identifying the decisions that are being made. So right here, there's about 40 of them that, come to mind. I put them on these stickies. This is just kind of a fun slide. But things like vehicle use, qualified plans, accepting an accountant, so hiring a new accountant I have to write a resolution for, absolutely. And the other thing, a lot of people ask me, well, do I really have to do minutes and resolutions if I'm the only person in the company? That seems kind of weird. Well, the answer is yes. I know it may seem schizophrenic, but the answer is absolutely yes. You do have to keep these minutes and resolutions in place. So you have to sit down in Cozumel, have a meeting with yourself for the first 15 minutes or 30 minutes while you're there, and then go enjoy the rest of your time out on the beach, sightseeing, whatever that looks like. But again, all these things have to be done. Now, failure to document. And I told you that I would tell you why this is so important on a federal level or dealing with the IRS. I have a client that came to me after this situation happened. He allowed me to use this story. So I'm gonna call him Jim. Jim had a corporate structure. He was an S corporation. He was in business 10 years. He had that beautiful binder that most people don't have when they form a corporation or an LLC. And he had one of the best financial firms in the nation doing his accounting and his taxes. Now, Jim received a notice of an audit from the IRS, and he was feeling very confident on the day of going to visit this revenue agent. In fact, he had his CPA in tow and was very, very confident that he would prevail. So when he sat down with the revenue agent said, "Let me see your corporate documentation." So Jim, very proud, pushed the documents, his financials, across the table. The revenue agent said, "No, I want to see your corporate documentation." So having that binder, he pushed the binder across the table. The revenue agent opened it and had identified that Jim had never done anything past appointing himself as a shareholder, a director, and an officer in the business. So again, keep in mind, 10 years of history had gone by, right? No documentation. So the revenue agent said, "All right, I know what I'm dealing with." Closed up the book, pushed it back across the table and said, "Now, Jim, let me see your financials." Over the course of this 3-year audit, the revenue agent had identified that Jim had taken over $250,000 in deductions as a corporation. But what did the revenue agent determine his business was? A sole proprietorship, because he hadn't been keeping up on the minutes and resolutions. So what happened here is that Jim now the revenue agent disallowed those deductions. He had to pay the taxes on it, and they penalized him to the tune of 45%. So you can only imagine what that tax bill looked like. all because Jim failed to document. So again, I can't stress this anymore, that yes, corporate structures are awesome. They're absolutely awesome. We get the tax benefits, we get the liability protection, and we get the benefit of being able to create generational wealth. But again, we need to make sure that we're using them correctly. So what do we need to do? Don't stress. If you already have an entity, we have a solution. All right. We have actually gone back as far as 25 years in one case and helped this client reconstruct the documentation. Now, I want you to understand, we are not backdating documents. Backdating documents is illegal. However, the IRS, the federal government, and the courts say you can reconstruct the documentation based upon recollection and records. So we have the ability and a proven method to be able to help get all of that brought up to a compliant status. So if you're uncertain about your structure, maybe you need an entity set up, maybe you need your entity reviewed, or you need some compliance, or you want to get your living trust in place, make the jump, give us a call. All right. Right here, I put a QR code. This QR code goes directly to my senior strategist, Stefan's calendar. However, that's probably going to fill up very quickly. So what I would encourage you to do is send an email to apex@controllersltd.com and schedule that time for a one-on-one with myself, my team, to make sure that your house is in complete order. So with that, that's the end of my talk. I hope this was very informative for all of you. And again, I encourage you to take advantage of this complimentary consultation. Reach out to us. It's always best to have a second set of eyes on your structure to make sure that you're getting the most benefit and that you're not going to encounter any situations upon your passing and that you can create generational wealth. So with that, I'm going to turn it back over to Cameron. Again, I thank you guys for allowing me to be here and have this conversation, and I look forward to talking to you.
So Scott, can you hear me okay?
Yeah.
Okay. So this kind of sounds like that you might need like $1 million or whatever to get started or to even think about this. Is that true, or can you do it?
Absolutely not. Absolutely not. If you're just starting out and your intent is to build a successful and profitable business, you need to form your corporation or LLC now. You don't have to have $1 million in an account. You don't have to have $1 million in assets. What we have to do is we've got to start now, right? When we form a corporation, it's like bringing a new child into the world. It's got to establish history. So again, as you build your business, whether you're starting out with 5,000 in the market, 10,000 in the market, maybe you're, borrowing money to get into the market, you need to start absolutely now.
Okay.
Scott, is there, this is Daryl, is there a cost to book a consultation with you?
There is not a cost to book a consultation.
And what I want to let everybody know is there are 1,900 people registered for this webinar. So if you have a QR code, I would schedule it like quickly. If you do send them an email, have a little patience because they're going to have probably a lot of people to get back to, but they will be getting back to you. They're not ignoring you. I just want to let people know that so they're not thinking like, oh, they don't reply. They are great at replying and getting back to you. Just, have a little patience there because like I said, there's literally 1,900 people registered for this webinar.
Absolutely. Absolutely. My team is well prepared for this, and we're actually bringing in other resources that we have out there. So Stefan knew of a few other people that have a lot of experience in this. And so as things grow, yeah, my team right now can handle it. But again, we're very prepared for that huge influx coming in.
Yeah, so there was another thing from the questions that we had a lot of questions coming through here. So hopefully we got to answer most of them, but some of them were very specific to the individual's need. Probably best to give you a call and to talk about those individual things.
Absolutely. I mean, I can talk about corporate structure and all of this for days and days on end. However, I want to make it specific to the individual. How does this work for you? So again, I encourage you to scan that QR code or send us an email and let's have that conversation, because it's not one size fits all for everybody. It's based upon what your goals are, what your vision is for the company, and what that long-term plan is.
Yeah, so this, as was advertised in the emails that we sent out, this was the foundational part, or this is a foundational part of how you become wealthy. Even if you're still working a 9 to 5 job and want to maybe break a little bit out of that, Scott can help you with that. He can show you
Absolutely.
how to get from your W-2 income over to a corporate income and help you live more of a corporate life and take advantage of all of those tax write-offs and expenses and all of that type of thing.
Absolutely, absolutely. And you know, every person that's a W-2 needs to have an entity set up. Reason being, as a W-2, there's really only 3 different deductions that you're able to take advantage of. Oh, actually 2. Well, yeah, 3. So putting money into a qualified plan, taking advantage of your mortgage interest deduction, and some health being able to make contributions to some other qualified plans. So those are really what you can do as a W-2. So again, you know, as if you're getting into trading, you can open up your all of these deductions once we put that corporation in place. And again, whether you straddle for a year, 6 months, or you're just ready to go, we need to start now to ensure that we can start building the credit history of the company, that it has the longevity and doesn't have that appearance of, well, you just started business last week. We want to have a little bit more history behind it. Exactly.
Yeah, this is, like we said, this is the foundational piece for things. That there's more that you'll learn from Scott and things as you go along here. We do plan on having an advanced training. So once you have all of your corporations in place or all of your entities in place and you kind of understand how those work, there's actually some more steps above that, which Scott actually touched on a couple of his slides here, but we'll go into more details of those, like the trusts and things like that, and how to kind of structure things so that you can create a legacy for whatever you may be able to leave behind. But tonight's webinar was for the foundational pieces. And like I said, get the QR and get an appointment scheduled. Some of this stuff may have been brand new to people, maybe didn't quite understand some of the lingo and stuff. We had some kind of involved questions of people who definitely understood things but have some more questions. Those are good things to bring up to Scott and his team there. So please.
And I can definitely state, as somebody who's made millions and millions and tens of millions of dollars, that the first step is setting up a company.
For sure.
So if you want to get on that path, here's somebody to go to talk to that is not just going to set up a company. You can find some website to set up a company for you for $500 or whatever. He's not just setting up a company for you. He's setting it up. He's making sure you're compliant. So if you get audited, you have all your books in order. Like literally, they've been chasing me for the last 3 weeks, trying to get me a compliance call.
That's true.
They made me promise to call tomorrow. So I mean, they stay on top of it. They stay on top of you to make sure you're keeping your stuff in order. And I need that. So I'm glad it's there, because otherwise I just put the details to the side. And Scott's group, Controllers Ltd, helps you keep all that stuff in the right place, in the right way, so you don't have to worry about it. Should something come up, you got everything ready. So
absolutely.
Yeah,
absolutely.
Yeah, this is good stuff, and we very much appreciate you being with us here tonight, Scott. I know it's getting late for people, but thank you.
Absolutely. I appreciate you guys having me here. Very honored to speak with your tribe, and I definitely look forward to a conversation with everyone on this call. So book those appointments, send an email, and we will talk very soon.
Very good. Thank you, and thank you everybody for joining. Like I said, we will have some more of these, but we appreciate you being here and hope you've gotten a lot out of this and that you'll give Scott a call. Thank you, and have a good evening.
And this is a presentation by ApexTraderFunding.com. So I hope you enjoyed it. Have a great night. We'll put that, by the way, we will be putting this up on the YouTube channel at youtube.com/ApexTraderFunding and on the Facebook group and page of Apex Trader Funding.
Okay. Have a good evening,
Awesome.
everybody. Thank you.
Have a great evening.
Bye.
All right, everybody have a great night.